Hello everybody, welcome back. So yesterday we saw a continuation of the move down. We got the temporary area of support that held. So far so good, bit of a nice little bounce, rejection, continuation, rejection, and probably another attempt to break this Bollinger Band center, 59,236 and 59 cents to be exact. So I mean, look, when it comes to momentum has brewed bullish divergence throughout the last few days. That has catalyzed this move, and if we do get continuation up, we'll get another retest of the death cross, which again is an area to try and short from if we don't already short this area. To be honest, I'm not suggesting you short. Like, it's that shorting is for those who are fully control of their trades. Risk management, completely knowing where to get in and where to get out. It's not for people who are learning. It's for people who have learned and are in control of their own trades, really. But this is a downtrend at the moment, so I suppose the opportunities exist in shorts. However, if we don't get rejected here and we break out and we move up here and we break out here, then actually at that point it's reversal time, I would say. And the low could already be in, but it is a very naive thing to say based on the daily, which is below all moving averages, all of them. We're currently getting rejected on the 200 exponential, which is again just below 60,000, and then below, just above that, we've got 60,100, and then we've got 60,500. And these are major areas that need to be reclaimed if you need to, if you're going to see a sort of a move back up. So yesterday on the stream, last night on the stream, I get the time old question, when's and where and how do we find the low? Well, there is no real answer to that. Excuse me, there isn't an answer as to how you find the low. There's ways to help interpret it, and it's nothing new. I've talked about it before. Bullish divergence, weekly money flow indexes, spotted lows in the form of bear markets, in the form of crashes. It's found the tops of bull markets, again, end of bear markets, and recent peaks in this bull market. So I'm pretty confident in its ability to help us try and navigate the next major low. And based on this channel, this descending channel, falling channel, whichever you want to refer to it as, it's a consolidation formation really, and a safe one, a nice one. It's not a descending triangle, it's nothing like that. It's a simple channel that has a relatively decent fix to it. Bang, 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 bang. I'd be looking for another move down, to be honest with you, to get some bullish divergence on that money flow index. And the best place you'd be looking for would be a move down. Currently, if it were to do it, this week or next week, really, there's not much to it. Whether it's not descending at a dramatic speed. Looks like it's decreasing by like maybe $200 with every week that goes by, so it's not dramatic, but it's enough to potentially give us some bullish divergence. If we move down towards 52,500, you get the bullish divergence on the money flow index. You might find that area marks the low off. It's also a 50 simple moving average on the weekly as well, so all part of this golden cross that took place here that was never retested, hasn't even seen a retest. I mean, we had the wick down to it, all markets suffered that, and a massive big bounce up into the Bollinger Band. So look, it's still consolidated. We've been saying this since December, that we expect a consolidation throughout the summer, and look, we have it. Look, the bull market, or should I say the bull market began in November 2022 when the low was in. It's been rallying ever since. It's been going up for a very long time, went up for what, 15, 16 months constantly. So we've been consolidating now for about 6 months, more or less. That's all very in keeping with the time it takes to cool off from such a long, consistent move up, really. So I would be looking for this to end soon, for better or for worse. And that means if we break down from here, we should target areas below 40,000, 38,000, 36,000. These areas are on the cards if we lose this consolidation formation. This technically being consolidation formation is bullish, because consolidations move to accumulations, which move to breakouts, and then continued on to new all-time highs. That's the nature of a formation like this. It's not bearish. It's bearish in the form of a consolidation, but it doesn't really point to a breakdown. It's just like a reset, really, of the chart. My fear is that the stock markets are getting peaky, or they are peaky, and despite not breaking down, they keep toying with the idea of breaking down, then they pick themselves back up again. I think that they are due a consolidation of their own as well. But if they don't, and they might not have to, but if they don't, then this should resolve sooner rather than later. Now, back in December, well, I mean, let's just face it, back a year ago, just short of a year ago, October, I was very bullish on crypto, all crypto. I said, this is alt season time. We got the alt season. Then when we got to December, I said, right, that's it. I'm going to take a lot of chips off the table, and I can do some casual trading if we still keep going up. But by April, it was pretty obvious that we'd finished all of that, and it was time to wait for the summer consolidation to kick in. And we got that, and we still see it. So all of this has been, I suppose, theorised, about a year ago, that we would run up and then we would cool off throughout this summer. And then, again, just as I had theorised, I believe quite strongly that if all other markets are okay and no black swan attacks any of these charts, then we should resolve this by the end of the year to the up. That also means that we could see something like this, bang, oh, and then that's it. That is what we could see. We could also see this, bang, down, and then move back up, and then break out. So in either direction, it should resolve to the up by the end of this year, and next year being pretty impressive. So whether I'm saying that we're going to this area now, and that's where it finishes, or we see a big sweep of these lows down here, my expectation is that it does resolve to the upside in dramatic fashion. People forget what Bitcoin and crypto can do. What's a 40% down compared to a 300% up? It's a risk to reward is good. For those, like I always use, well, I don't always, but I sometimes use the analogy as, right, I'm going to prison tomorrow. I've said something on social media, someone doesn't like it. I'm going to prison tomorrow. I'm not really, but I'm just saying. So I better buy something. What do I think is going to happen? I think that's going to happen. All right, so I won't be able to make these trades. I'm going to be in a sell. So I'll have to buy today because I won't be able to buy tomorrow, and I'll put a sell order higher. I'm going to jail for 12 months, and I need to get myself in, and then I need to think of a limit order to get myself out over the next 12 months. And that's how I would navigate this trade. Risk to reward. I'm not saying you should buy now unless you go to jail tomorrow. But look, we could come down here, resolve to the up. We could come down here, resolve to the up. Either way, we should resolve to the up. But that might be a bitter pill to swallow for people if you're waiting for the low that never happens. Or if you buy the first dip and then this happens and then you sell it because you've not planned for what it's going to look like in the future. That is my expectation. I just want to make it clear. I'm not perma-bear. I am just a little concerned about the broader markets, being indices and Forex, and I'm well aware that Bitcoin is still consolidating, and when consolidating, it's not uncommon for a little bit of FUD to sneak in around the corner to push prices down lower than they need to go, to allow for people who know more than us to buy. So I am bullish over the next 12 months. However, I am bearish over the next few weeks. So hopefully that makes sense. Oh, I can hear you. Someone's out there. I can hear him going, now, he's bullish and bearish. He doesn't know what he's talking about. He can't be bullish and bearish. He can't be bearish and bullish. Oh my God. Oh, I can't take it. Two different directions. That's not possible. It's possible. It's definitely possible. So that is the expectation. That is my thoughts on the matter. There is nothing much more to say about it than that. If you really want to get down and dirty into the shorter term time frames, we can do that, and I'll leave it with you there, just to hopefully put a little bit into perspective for you all. And this is for those who are struggling to understand, but I'm sure most of you do. 200 exponential moving average up here is a death cross. And gets retested. I took a position. I'm still in that short position here, actually. If we come back into it, that's a short position. It's a sell position, short position. At this very moment in time, we can see the Bollinger Band. Bang, another one. Bang, another one. Bang, 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 bang. But if we break from here, we should see a nice move up into 61,000, where, again, a bang takes place. Momentum is still up. It's not fading. So there is a relatively decent chance that this resistance on this 4-hourly breaks, and we do see 61,000 today, or even tomorrow. There is a good chance of seeing that. But on the flip side of that, we do have a short signal on the Itchy Cloud. We've got the Chiku span below the cloud, price action below the cloud, the conversion baseline crossed over here, and obviously the leading portion of the cloud being red. So we've got a fresh short signal generated on this candle here. So there is evidence to say that we go down lower, and if you break this, then it's the trend line. 52 to 53,000. So look, there's evidence in either direction. I would look at the larger trend, which is still one of a downtrend, as more of a key, and despite the momentum creeping up and the bullish divergence that's brewed that led to this current retest of the Bollinger Band Centre, the highest I would expect to go excuse me, is 61,000. It's another opportunity to take a short position with a tight stop loss. Excuse me. So I'm going to leave with you there. There really is nothing much more to say about it than that. I'm bearish and bullish. I'm bullish and bearish. It's a complicated scenario, but that's why trading isn't for everybody. Believe it or not, you can be both. Bearish in the short term, bullish on the long term. And then if you really want to talk about what I'm going to be in 12 months, I'm probably going to be bearish again. So, oh my God, this is so crazy. He's bearish, then bullish, then bearish. That is madness. I don't know if you've noticed, I'm sure you have, but charts go up and down regularly. And so, you know, that is the deal. I'll leave it with you there anyway. There's nothing much more to say. If you want to join the Patreon, there's links in the description below. Other than that, hope you have a nice day. Take it easy.